Hey there, my savvy investors. Iggy the Investing Iguana here, and boy, do I have a treat for you today. Picture this, you're at a restaurant, and the prices on the menu keep going up every time you visit. That's inflation for you, and it's been leaving a bitter taste in everyone's mouth lately. But what if I told you there's a way to flip the script and make inflation work for you? That's right, I'm talking about investing in REITs, specifically Mapletree Logistics Trust, or MLT for short. Now, I know what you're thinking, Iggy, how can a REIT possibly beat inflation? Well, buckle up, because I'm about to take you on a wild ride through MLT's latest earnings report, and trust me, it's going to be a game changer. You see, while everyone else has been struggling to keep up with rising costs, MLT has been cooking up a secret recipe for success. And today, I'm going to share that recipe with you, step by step, so you can start making some serious dough in the market. So, grab a snack, get comfortable, and let's dive into the juicy details of how MLT is not just surviving, but thriving in this inflationary environment. By the end of this video, you'll have all the ingredients you need to start building a portfolio that can weather any economic storm. Let's get started. Imagine this scenario: you and your friends have a shared interest in real estate. You dream of owning a portfolio of properties, from commercial buildings to residential apartments, and perhaps even some industrial spaces. However, the reality is that you don't have the substantial amount of cash required to buy these properties outright. This is a common predicament for many who are interested in property investment. This is where real estate investment trusts, or REITs, come into play. Think of REITs as a large collective fund, similar to a mutual fund, but specifically designed for real estate. This fund is pooled together from the investments of individuals like you and your friends, as well as other investors around the world. The REIT uses this pool of money to buy and manage a diverse range of properties. These can include shopping malls, office buildings, hotels, warehouses, and more. The goal of the REIT is to generate income through these properties, either through rental income or through the sale of the properties at a profit. But how do you participate in a REIT? It's quite simple and similar to how you would invest in the stock market. REITs are publicly traded on major stock exchanges, and you can buy units or shares in a REIT, much like you would buy stocks of a company. Each unit that you purchase represents a fraction of the entire portfolio of properties owned by the REIT. In this report, they highlighted an increase in both their revenue and net property income. The net property income is essentially the income they generate from rent after deducting the expenses associated with managing the properties. This increase was attributed to better contributions from existing properties and acquisitions completed during the fiscal year. However, despite the increase in revenue and net property income, MLT reported a decrease in their distribution per unit, DPU. DPU is a measure of the return for a REIT's investors, calculated as the total dividend paid divided by the number of issued units. It's an important figure as it indicates the income an investor can expect to receive for each unit they own. The decrease in DPU for MLT was primarily due to two factors: currency headwinds and higher finance costs. Currency headwinds refer to the negative impact of foreign exchange rates on the company's earnings. MLT, like many REITs, has properties in different countries and therefore deals with multiple currencies. When the value of these currencies fluctuates, it can affect the translated value of the REIT's income and expenses, and consequently, its DPU. Higher finance costs are another factor that impacted MLT's DPU. Finance costs include interest payments on loans and other debts. REITs often use leverage, or borrowed money, to finance property acquisitions. When interest rates rise, the cost of servicing this debt increases, which can eat into the REIT's distributable income and result in a lower DPU. Mapletree Logistics Trust, MLT, despite encountering some obstacles in China, has shown remarkable resilience in its operations. Even amidst the challenges in the Chinese market, MLT has successfully maintained a robust portfolio occupancy rate of 96% as of the end of March 2024. This achievement is a clear reflection of MLT's effective strategies in property management and tenant retention. Now, let's delve into the concept of rental reversions. In the realm of real estate, rental reversion pertains to the change in rental rates when a lease is up for renewal. A positive rental reversion implies that the new rental rates are higher than the previous ones, which is advantageous for the REIT as it leads to an increase in rental income. In the case of MLT, they reported positive rental reversions across their markets, with rates ranging from 2.6% in South Korea to 11.1% in Singapore. This indicates that MLT was successful in negotiating and securing higher rental rates for their properties when leases were due for renewal. However, it's important to note that China was an exception, where MLT recorded a negative rental reversion of -10%. Despite this, the overall weighted average rental reversion for leases renewed during the fiscal year 2024 was 7.1%, excluding China, and 2.9% when including China. In essence, while MLT faced some turbulence in China, they managed to maintain a high portfolio occupancy rate and achieve positive rental reversions in several markets. This demonstrates the strength of their diversified portfolio and their ability to navigate through challenging market conditions. It also highlights the potential of REITs like MLT to provide investors with a steady stream of income, even amidst market volatility. Mapletree Logistics Trust, MLT, has a commendable debt profile, which is a crucial aspect of their financial health. A significant portion of their debt is secured at fixed rates. This is a strategic move that shields them from the impact of rising interest rates. When interest rates rise, it becomes more expensive for entities to borrow money to refinance their loans, which can erode their earnings. However, by locking in a substantial part of their debt at fixed rates, MLT has effectively hedged against this risk. Moreover, MLT's debt is well structured and spread out over time. This means that the repayment of their debt is staggered and not due all at once. This is a prudent financial strategy as it prevents the REIT from facing a situation where a large amount of debt comes due at the same time, which could strain their finances and potentially impact their operations. In addition, spreading out debt repayments over time provides MLT with greater financial flexibility. It allows them to better manage their cash flows and ensures they have sufficient funds for other critical areas such as property acquisitions, asset enhancement initiatives, and distributions to unit holders. Furthermore, having a solid debt profile with a high level of fixed-rate debt and well-staggered debt maturities enhances MLT's creditworthiness. It signals to investors and lenders that MLT has a robust financial management strategy in place, which can lead to lower borrowing costs in the future. The tenant diversity of Mapletree Logistics Trust, MLT, is indeed a noteworthy aspect of their business model. Having a diverse tenant base is a strategic advantage for any real estate investment trust, REIT, like MLT. In the case of MLT, their top tenant contributes only 4% to their total revenue. This means that their revenue stream is not overly reliant on a single tenant. This is a significant factor in risk management as it reduces the potential impact on their revenue if any one tenant were to default or terminate their lease. Furthermore, the combined contribution of their top 10 tenants is around 22% of their total revenue. This further underscores the diversity of their tenant base. It's akin to the well-known investment principle of not putting all your eggs in one basket. By spreading their risk across multiple tenants, MLT is better positioned to weather potential downturns in any one sector or disruptions to any individual tenant. This tenant diversity also provides MLT with a level of stability in their revenue streams. With a broad tenant base, fluctuations in rental income from any one tenant will have a lesser impact on the overall revenue. This can lead to more predictable and stable returns for investors. Moreover, a diverse tenant base can also be beneficial in terms of portfolio diversification. Different tenants may belong to different industries, and as such, the performance of these industries will affect the tenant's ability to pay rent. By having tenants from a variety of industries, MLT is able to mitigate the risk of industry-specific downturns. Mapletree Logistics Trust, MLT, has been quite active in the real estate market over the past year. They've been strategically acquiring and disposing properties, a process often referred to as capital recycling. This is a common strategy employed by real estate investment trusts, REITs, to maintain a profitable and up-to-date portfolio. In their recent ventures, MLT has expanded its reach to new markets. They've acquired assets in bustling cities like New Delhi, India, and Ho Chi Minh City, Vietnam. These cities are known for their rapid economic growth and increasing demand for logistics spaces, making them attractive investment destinations. On the other hand, MLT has also been successful in selling off some of their properties. These properties were sold at a price higher than their valuations, indicating a strong market demand and MLT's ability to realize profits from their investments. In essence, through capital recycling, MLT has been able to keep their portfolio dynamic and profitable. They've managed to offload properties that may not yield high returns in the future and reinvest the proceeds in promising markets. This strategy not only ensures a fresh portfolio but also optimizes the returns for their investors. It's a smart way for REITs like MLT to stay competitive in the ever-changing real estate market. All right, there you have it, folks. MLT's secret to beating inflation, served hot and fresh, just for you. Remember, investing in REITs with strong fundamentals, like MLT, can help you protect your wealth and grow your passive income, even when inflation is running wild. If you found this video helpful, do me a solid and smash that like button. And hey, why not join the Investing Iguana family by subscribing to my channel? I've got plenty more financial wisdom to share, and I promise to keep it fun, informative, and easy to digest. Until next time, this is Iggy, your friendly neighborhood investing iguana, signing off. Stay savvy, my friends, and keep on investing.